Warren Buffett is one of the world's greatest investors, but what is truly great is that we can peek into exactly what he's invested in via Berkshire Hathaway. A really easy way to do this is through the CNBC Berkshire Hathaway Portfolio Tracker, which is linked in the description below. And here you can look at all of the current Berkshire holdings. You can sort them by portfolio percentage, number of shares, and even percent of stake in that company. And there's even a link to the SEC's 13F filing. So who must file a 13F? According to the Securities and Exchange Commission, institutional investment managers that use the United States mail in the course of their business and that exercise investment discretion over $100 million or more in Section 13F securities must file Form 13F. Hey, what's up? Welcome back to the channel. My name's Russ. I am an amateur investor. I've been a welder for almost 23 years. I'm a Navy veteran, and I've been dividend investing since 2018. What's really cool about 13Fs is that we get to see what these fund managers who have over $100 million under their discretion are invested in. But always keep in mind to take this with a grain of salt because it's just a snapshot on that particular day. And here we see what Berkshire Hathaway held on May 16th, 2022. Always remember, on May 17th, they could have sold out of some of these positions completely. So replicate 13F filings at your own risk. So in this video, I have 5 Warren Buffett dividend-owned stocks that are cheap. And by cheap, I mean they have a dividend yield that is at least 25% above their 5-year average and a forward PE that is below their 5-year average. Make sure you stick around for the top 10 Warren Buffett paying dividend stocks. So buckle up, Buttercup, give me a confetti thumbs up. And with that, we are on to number 5. U.S. Bancorp, ticker USB. U.S. Bancorp is an American bank and the parent company of U.S. Bank and is the 5th largest banking institution in the United States. They provide banking, investment, mortgage, trust, and payment services, have 3,106 branches, and U.S. Bancorp operates under the second oldest continuous national charter, granted in 1863, following the passage of the National Bank Act. Now, Berkshire currently holds 144,046,330 shares and receives $265,045,247 in annual dividends. U.S. Bancorp has a Simply Safe dividend score of 55, borderline safe, while Seeking Alpha has a dividend safety score of B. Their current total year-to-date return is negative 14%. And while their dividend was cut in the last recession, it has grown for 11 years, is currently at $1.84 a year, and is paid every January, April, July, and October. The current dividend yield is 28% above their 5-year average, and that forward PE is almost 18% below the 5-year average. The share price is currently at a 52-week low, which is almost 24% off the high. And looking at the weekly chart, USB seems to have found support at the 200-week moving average, which is the green line, and the next support I see is at about $41. On to number 4, STOR Capital, ticker STOR. They are a REIT, which stands for Single Tenant Operational Real Estate, and they were founded in Scottsdale, Arizona in 2011. Now, 80% of their acquisitions are from sale-leaseback transactions, which means users sell their property to STOR Capital and then enter into a lease for the property for a mutually agreed upon term or time period. STOR also invests in the very lucrative triple net lease properties where the tenant pays all the expenses of the property, including real estate taxes, building insurance, and maintenance on top of rent and utilities. Berkshire Hathaway currently holds 14,754,811 shares, which is good for 9% of STOR Capital's outstanding shares, and they receive $22,722,409 in annual dividends. STOR Capital has a Simply Safe dividend score of 70, safe, while Seeking Alpha has a dividend safety score of B. Their current total year-to-date return is negative 23%. Their dividend has been growing for 7 years with a 6% 5-year CAGR. paying $1.54 annually. That is paid each January, April, July, and October. Now, STOR's current dividend yield is 28% above their 5-year average. The forward price to adjusted funds from operations is almost 24% below the 5-year average, and the share price is at a 52-week low, which is about 29% off the highs. Checking in on the weekly chart, STOR seems to have found support here, with the next support level at about $24. Number 3, Bank of New York Mellon, ticker BK. BNY Mellon was formed when the Bank of New York and the Mellon Financial Corporation merged in 2007 and is the largest asset custodian in the world, with $45.5 trillion under custody and administration. Now, from what I've read, they are not a traditional bank in the sense that they don't issue credit cards or make car loans or deal directly with most of the population, but they are more of a large back office in finance with an additional large wealth management operation. Berkshire currently holds 74,346,864 shares and receives $101,111,735 in annual dividends. Now, BK has a Simply Safe dividend safety score of 55, borderline safe, and Seeking Alpha gives them a dividend safety score of B. The current total year-to-date return is almost negative 26%. And like US Bancorp, their dividend was cut in the last recession, but has been growing for 11 years. And that dividend is currently at $1.36 annually, which is paid out every February, May, August, and November. BK's current dividend yield is 28% above the 5-year average. Their forward PE is almost 26% below the 5-year average, and their share price is at a 52-week low, almost 33% off their highs. And looking at the weekly chart, if they continue to fall, I see strong support around $38 a share. Number 2, Ally Financial, ticker ALLY. Ally Financial Incorporated is a major digital finance services company that provides financial services, including car finance, online banking, corporate lending, vehicle insurance, mortgage loans, and an electronic trading platform to trade financial assets. Ally is also one of the largest car finance companies in the United States, providing car financing and leasing for 4.5 million customers and originating 1.4 million car loans annually, and their electronic trading platform has approximately 350,000 funded accounts. Oh, and by the way, they were known as General Motors Acceptance Corporation, or GMAC, from 1919 until 2010. Berkshire currently holds 8,969,420 shares, and will receive about $10,763,304 in annual dividends. Ally has a Simply Safe dividend safety score of 50, borderline safe, and Seeking Alpha has a dividend safety score of B+. Their total year-to-date return is negative 21%. Their dividend has grown 5 straight years and has an incredible 5-year CAGR of 41%. Ally is paying $1.20 annually every February, May, August, and November. Their current dividend yield is 46% above the 5-year average, and that forward PE is 39% below the 5-year average. And like the rest of these on the list, the share price is at 52-week lows currently, which is almost 33% off the highs. And on the weekly chart, I see a little bit of light support around $35 a share. And number 1, Citigroup, ticker C. Citigroup is the 3rd largest banking institution in the United States, with approximately 200 million customer accounts, and for better or worse, they do business in more than 160 countries. They had about $10 billion of Russian exposure, which they've trimmed back to about $8 billion as of this recording, and Citigroup offers traditional banking services to retail customers, credit card lending, corporate and investment banking, and as of 2020, had almost 20 $34 trillion in assets under custody. Berkshire currently holds 55,244,797 shares, which will net them about $112,699,386 in annual dividends. Citigroup has a Simply Safe dividend safety score of 55, which is borderline safe, and a Seeking Alpha dividend safety score of A-. Their total year-to-date return is negative 23%. Now that dividend currently has a 0-year growth streak, but a 37% 5-year CAGR. They're paying $2.04 annually every February, May, August, and November. And check it out, Citigroup's dividend yield is 51% above their 5-year average, while their forward PE is about 27% below the 5-year average. And of course, you guessed it, we're right at 52-week lows, about 38% off the high. Now, Citigroup has caught support at $47 a share, and the next strong support I see is all the way down at $38 a share. And now the special bonus, Warren Buffett's top 10 paying dividend companies, starting with number 10, Bank of New York Mellon, number 9, Citigroup, number 8, U.S. Bancorp, number 7, American Express, number 6, Kraft Heinz, number 5, Coca-Cola, number 4 is Apple, number 3, Bank of America, number 2, Occidental Petroleum, which includes preferred dividends, and number 1 at $904 million a year is Chevron. I'd love to know in the comments below, because you know where the comments go, what you thought of this video. And check this out. Dividends are certainly a very important part of any income investor's portfolio, and I recently had the pleasure of doing my very first ever reaction video to Sven Carlin's Dividends Are the Answer, Dividends Will Make You Rich. And you can check that out in the little box next to my head. And if you click that, I will see you over there.